Welcome back to the Dividend Diplomats YouTube channel. You've got Bert the Hurt, the new cap, hat wearing Bert the Hurt Locker over there. And you know you're rolling with Lanny. Happy New Year again. This is 2022. We are the Dividend Diplomats talking to you about dividend investing.
Yeah, I had to switch up the cap because everyone keeps giving me a hard time about my Ohio State hat, even though they won that Rose Bowl this week, everybody. So, hey, for all those people out there specifically calling out that Michigan score after OSU lost to Michigan, look who was holding up the trophy after the bowl games. But we're excited here to learn a little bit more about Lanny, what Lanny has in mind, especially as he kicks off 2022. But before we jump in, everybody, please subscribe to the channel if you haven't already. Let's give this video a thumbs up. Thank you for the support, everybody. We appreciate it. Lanny, what's on your mind here?
All right, guys. So many people have asked, when do you guys sell a stock? Do you ever sell a stock? For 99% of the time, you hold on because you are a long-term investor. You're a dividend investor. You buy companies that not only pay a dividend, but increase that dividend. And Bert knows this, but guys, it's time that I sell some stock.
Yeah, yes. There was a key word in there in what you said, Lanny, increase. You can underline increase because as we're always looking for those companies that increase. If somebody cuts it or if somebody stops increasing their dividend, that's usually going to be the first flag and the first thing that's going to cause us to investigate as to whether we should keep holding that company despite the lack of an increase or whether it's time to shed them.
So in this video, I'm going to talk to everybody here about the stocks that I'm selling, the why I am selling the stocks, one stock that is on the bubble to be sold, as well as what am I going to do with the proceeds from selling this stock.
Yeah, so everybody, this is exciting. And I think as we're going to go through there, we're going to hear a little about Lanny when we talk about each one of the stocks for why the three that he's selling do not necessarily fit his investing strategy. So hang tight with us as we go through each three of them. It's exciting. I know I'm pumped up, Lanny, to see what you're selling and how much your income is going to grow by your moves of what you're doing. And I hope all the viewers are as well.
Guys, again, it's all about making sure your capital's best put to work, or at least better than what it's currently doing. And it's going to be pretty easy to argue that the capital just isn't doing much, if not anything, with these stock positions. So again, I'm selling some stock, but I'm also going to be buying some stock. So to talk about the three stocks I am selling this week of January 3rd. All right, Bert.
Yeah.
The first one.
Yeah.
DuPont. Ticker symbol Dividend Diplomats, aka DD.
I know. I'm not surprised that this one is on the getting the little red tag that it's time for it to go home here. This is one of the companies that is been part of one of the most confusing transactions, and I say confusing lightly because it's just a lot of entities have merged over the last few years. You had Dow, you had DuPont, you had Dow DuPont. Then you had the three company splits. Now you have what? Dow, DuPont, and then what? This company? No, this is the DD. I'm even getting them confused here. Yeah, there are three companies.
Yeah.
Oh, that's right. That's the third one. Okay. So Lanny, tell us a little bit.
Increase their dividend.
That's right. So tell us a little bit why you are selling the DD, as we would like to call it.
So again, originally bought Dow. And then you had Dow DuPont. And then they spun off into three companies. Now, DuPont DD, again, trades at almost $81. And actually, again, it's performed okay. It hasn't been the absolute worst stock in history. It went up 15% in the last year. But again, their dividend yield is only 1.49%. But Lanny, you don't care. Look at the yield. Okay, the dividend growth has not happened in almost 3 years since you've held this stock, since I have owned this stock.
Yeah, and waiting for that. I mean, after a spinoff, you're never exactly sure what is going to shake out. So you want to give it a little time to see what management strategy is. An example of where it went right is after Pfizer spun off Viatris. You wanted to see how the company's dividend growth was going to happen. You saw growth at Pfizer and Viatris. That wasn't the case here, Lanny. So I think it's very reasonable for you to consider this one. And can you tell us a little bit about your exposure to the sector as well? And did that play into your decision to sell this company?
Yeah, of course. So again, I have Dow, I have some other exposure elsewhere. Obviously, Lionel Basel, LYB. Maybe they're not direct, correlated competitors. But again, I already had enough space here, or at least too many different companies in the arena. And, this was just dragging at 1.49%. I almost have $2,000 worth of it at 1.49%. Again, without it growing at least 6, 7, 8% growth, I mean,
Yeah.
see ya.
Gone. Get out of there. Take that cap, throw it off. No, I'm kidding. Makes sense to me. So let's see on this second company here, Lanny. Let's change the sector up here a little bit because we're going to learn later on in the video how you're reallocating the money. So let's put a pin in that conversation until later. Talk to us about that second company here that is CNR out of your portfolio.
So the second company, which I loved this company. I mean, from a customer standpoint, from a traveler standpoint, I loved Delta Airlines, ticker symbol DAL.
You weren't the only investor there that loved this company too when you bought it. Who was the other small time investor that bought shares in this company?
Very small time investor, goes by the initials WB. Good old Warren Buffett, the Oracle himself, was also buying Delta. They were, great performing airline, one of the best in the business. I arguably thought the best in the business, literally from just a price, value, and financial investment standpoint, increasing their dividend year after year after year. Then the pandemic happened, Burton. What happened?
Well, they cut their dividend. They received a lot of government aid. Obviously, you can't forecast a pandemic happening. You look to company with future earnings and future minds and like you cannot predict the kind of event that happened with the pandemic that essentially shut down travel for a year, and they're still recovering, working towards it. So it materially changed the company from you weren't buying the same Delta Airlines that you invested in prior to the pandemic. It is a fundamentally different company at this moment.
And I'm real hopeful for Delta, but I feel like the runway's a little bit too long in the future for dividends to kind of come back. And again, I'm not a predictor. I'm just basing it off of where it's at right now. And the road to recovery, I feel like, is just taking a little bit longer for the airline industry, especially with all these new variants happening. Again, I've given it, a good almost 2 years from the pandemic.
There's somewhere better to put your cash. There's somewhere better to put your cash. You can always buy it again later if it meets your metrics in the future when dividend growth gets closer to returning. So why don't you talk to us about that third company, Lanny?
Another Warren Buffett savior, talking about Occidental Petroleum, ticker symbol OXY. And I actually sold a lot of it during 2021 to offset some capital gains from some mergers that happened on my portfolio. So I still had about $1,000 left of Occidental Petroleum. And guys, that penny a dividend, I just already have a lot of exposure as well to the, that arena. I have Kinder Morgan, I have Shell, I have Total Energies, and then in my wife's portfolio, we have ExxonMobil.
Yeah, keep them going. I was going to say, just keep riling them off. You got a lot of companies in this sector too. So you can easily trim down your oil exposure, and especially in the ones that aren't paying you dividend, because that's why you look at oil and gas companies, because of the dividend that they pay you.
I guess that's $1,000. I didn't say it earlier, but Delta have about $3,000 worth as well. So, when you start doing the math, we're talking $6,000 is on the table, approximately $6,069 as of December 31st is on the table. And with Occidentals, I don't know when dividends are going to come back for them either. Paying a 1 cent point, 1.4% yield. getting that whole $1.36, buying me one McDonald's, cheeseburger from the
I don't know if that
dollar.
would buy you a cheeseburger anymore with inflation. I think it costs more than that. But
So in total, Bert, here, this was only a 0.5% yield on
yeah,
$6,000.
well, I can see why you're making these moves, and you're closing out 3 positions here, 3 less tickers to follow, 3 less companies to have to research, keep on your mind, and you're not really losing that much from your point from a dividend yield perspective or even a sector because you're already covered with other companies in those areas except for Delta. But from what it sounds like and what I'm hearing from you, and correct me if I'm wrong, you just want to stay away from the airline sector altogether until future notices. So you're not losing anything because it's a sector you want to avoid.
When you think about, there's a few industries, and I'll talk about another one coming up as well, that are capital intensive. And Delta, you have people and planes that cost a lot.
It does. Those planes aren't cheap, and you got to keep those planes nice. So you mentioned that there was one more company that's on the bubble here, Lanny. Do you want to talk to us about that company, the sector, and just give some quick highlights for what may keep the investment and what may cause you to finally just pick that one out too?
So this one has the old comeback story as well. Bed Bath and Beyond, ticker symbol BBBY. Before they had a great balance sheet. They had that darling of a balance sheet. They had that milestone generational celebration type of industry hold. Your newborn, your graduation, you're going to college, your first house.
Yeah, weddings. Yeah, everyone had a registry for every major life event at Bed Bath and Beyond or Bye Bye Baby.
And they still do. I mean, we still have, wedding invitations and baby shower invitations where the registry is with Bed Bath and Beyond. We're just coming off of the holiday season as well, and this company to me is on the bubble of being sold. I have about $1,500 worth, but they also removed their dividend because of the pandemic. And because it's retail, really deep into retail with their own brands, but being a heavy brick and mortar store with a lot of new management, I'm giving it maybe for sure one more earnings release, maybe 2, but that's really going to be dependent on the next earnings release to see if I see any sign that Bed Bath & Beyond is going to continue to do better financially.
And remember, this is different than the airlines where the entire sector is going to take a while for dividends to come back. If you've watched our channel for the 6 months, the one thing you should be catching up on, especially when we talked about all those dividend increases every week, is the strong retail companies are increasing their dividend hand over fist. They're announcing 1, 2, 3, some even 4 dividend increases in 1 year to get it back to where it was pre-pandemic and even post-pandemic. So I can see why you're keeping an eye on Bed Bath & Beyond that still nearly 2 years later has not brought that dividend back.
Yeah, and they've become one of those meme stocks at a few points, and I did consider then like, oh, is it time to remove myself from owning this stock? But I kept being, again, maybe this is where you should not be emotional with buying a stock. I kept going, oh, I like this story of them coming back. I like what this management team is doing. But then when it has to come down to the numbers, and right now the numbers haven't made sense for a little while. They do look like they're getting better, but again, I need to see what happened these last few months.
So to summarize it here, the 3 stocks that Lanny is getting out of his portfolio: DuPont, ticker symbol DD; Delta Airlines, DAL; Occidental Petroleum, ticker symbol OXY. So in total, by liquidating those positions, he's going to unlock $6,069.35 to reinvest. On the bubble is Bed Bath & Beyond, ticker symbol BBBY. So in the next few quarters, there may be another potential $1,500 to reinvest elsewhere. Here's what people want to see, though, Lanny. People want to see, what are you going to do with this money?
So guys, I'm not somebody who wants to just keep it in cash. So I'm going to be moving the money right away into 4 stocks / ETFs. So I'm going to be buying 4 stocks and ETFs with this sale, the $6,000 proceeds, we'll call it. First, I'm going to put 55% of my proceeds into Vanguard VYM. Ticker symbol, again, Vanguard high dividend yield, VYM is the ticker. So that 55% alone, again, I'm losing $30 from the sale of $6,000 worth of stock. the purchase into VYM, which I'm estimating to be about $3,300, is going to add over $90 in forward income.
So essentially, you're tripling it there from just reinvesting 55% of the proceeds. You're tripling that dividend income you were earning off that full position into this one. It's exciting. I mean, everybody knows. We know the history. Check the videos. You've been watching our channel for long enough. You know how much Lanny loves VOM. You know why we do, so we don't need to talk more about it. But it's a great way to unlock value right there. There's still 45% to go, though. If you're only investing 55% in BYM, why don't you tell us a little bit more about how you're splitting up the last 45%?
It's another weekly stock I've been buying, getting into the real estate industry. Yep, Store Capital, STOR. I'm going to be putting 25% of the proceeds, or about $1,500, into Store Capital. And again, that's going to add about $67 to $68 in forward income from that purchase as well.
All gravy here again. We know why you love Store. We know it's a great company. So let's see. Let's keep
Warren, let's not mess this one up.
Yeah. So the counting 55% to VYM, 25% to Store, 20% left, Lanny. What are you doing? Come on,
All
keep
right,
on.
I'm taking the final 20%, and I'm going to split that into two. Again, these are positions, stocks that I already hold and own in my portfolio. 10%, because I'm selling DuPont, I'm going to move 10%, or about $600, into Lionel Basel, ticker symbol LYB, a stock that, yes, I did hit the 100 share marks thanks to you guys. Now I'm adding about, again, 6 shares here to Lionel Basel, adding another $30 in forward income. But Bert, there's one more stock that's taken the last 10%. That's a Dividend Aristocrat that you brought up. This is giving the tilt of the cap to Bert. So I'm going to be investing into a Dividend King that I felt like I could have used just a little bit more. He evaluated it in his video and in his article. It has Leggett and Platt, ticker symbol LEG. So about $600 in there at a 4% yield, producing $25 in dividends.
Love it. I love it. It's a great company. Keep building the positions in the company you want, the ones that you feel comfortable about, their current dividend and their ability to keep growing their income. I think that's my biggest takeaway from hearing your moves, taking it out of positions in companies where you don't necessarily like the current dividend and their future growth prospects, and moving it into those companies where you want to see that income grow, because that is the goal of what we are doing. So in total, with these 4 new investments, when you're reallocating that over $6,000, the total dividend income is, drumroll please, let us know what it is, Lanny.
$215 in income added. Net of what I lost, you'll have about $184 in net new ads, or a 600% increase, which is what we need, because my wife and I, we do have a goal of adding $5,000 in forward dividend income this year. Obviously, dividend growth and dividend reinvestment is going to help a ton to get there, probably more than 25 to 45% of that goal. But this move right here definitely gives us the shove that we needed.
Fantastic stuff. That's a 600% plus increase right there. Everybody, let us know in the comments section. I'm pumped up for Lanny. I'm very excited right now. This is great to see. You got to let us know in the comment section how excited you are for Lanny here. Let us know what it takes for you to sell a stock. Do you agree with how Lanny kind of went through this analysis and the companies that he invested in? Pumped up to hear everybody's thoughts on this too. It's exciting. It's always great when your income grows. That's the name of the game.
No, I appreciate the support, Burton. Guys, again, I'm a buy and hold investor. But once the company fundamentally doesn't make sense anymore for your strategy, for that journey to financial freedom, for you building that passive income, if you're adding or not adding passive income, if your passive income stream is not growing, it's time to move on. It's time to make the emotions go away here. So I'm actually saying see it to at least 3 positions this week, and I'm adding to current positions, making my portfolio that much easier to manage.
There it is, everybody. If you haven't already, subscribe to our channel. Give us the thumbs up. Happy 2022, everybody, and happy investing. Let's crush it. Let's reach financial freedom.
Guys, that was Bert the Hurt and Lanny from the Dividend Diplomats. Over and out.